All right, not much. Hello, Jamie.
Gentlemen, how's it going today?
Good, got you. I guess you got my screen, my first slide. Very good.
Yes,
Thanks
sir.
everybody for showing up. This February, end of February, is actually a record-setting month for us. We've had more net subscribers come in and purchase the product this month than yet. So because of that, I happened to notice on the polling that Scott did, a lot of people don't have or are just getting used to the trade ideas. So for this episode, we're gonna pull it back a little bit. I think last week we got some good feedback from some people that wanted a little bit more basic instruction, not to leap ahead into the advanced stuff. So I'm going to try and do a little bit more of that basic stuff today, which hopefully will resonate with a few people who are looking for that. Before we get to that, I did drop my bio in the chat window, which is on the GoToWebinar interface there. The chat window is a little plus button. You can pop that open. Occasionally we'll drop in some cloud links, but for now, just so you know who you're talking to, my name is Steve Gomez. I'm user number 3 in the Trade Ideas system. I was one of the first beta testers that Dan came to back in 2002, and been using the product ever since. So happy to be here, happy to help share in the growth of this company, and let's kind of move forward and see if we can get into a few things today. Firstly and most foremost is the disclaimer, the reminder that these webinars are really not designed as investment advice. Nothing you see here should be construed as investment advice. We're gonna show you some cool technologies and some ways to find some ideas, maybe a couple of interesting chart setups. But by no means is this registered investment advice or a Series 64. Anybody who has to go out and spend time getting their licenses and in order, they're the ones that are qualified to give you guys investment advice. So just to make the attorneys happy, reminding you we're not investment advisors here. We're a software as a service company. And one of the things that we're real proud of is the onboarding and the concierge that we give to new users. It's a very powerful program, and we recognize that it's hard to get going right out of the gate. It needs a little bit of help, a little bit of ideas, and some of the ideas that we offer to share with you are included like we're doing right now in this webinar. We have webinars Monday, Tuesday, Wednesday, Thursday. All of which are at 5 p.m. Eastern and have kind of a different flavor and a different group of people, so you're not always hearing from the same people. The window you see here is the live trading room, which is hosted by Barry Einerson, who is an absolute saint at being able to manage a very large room full of people asking questions while at the same time demonstrating our technology and trading his own account live. Additionally, we've got some really good traders in there as well that have their own style. So we often hear that our free trade ideas room is a lot more valuable than some of the rooms that people pay for out there. So if you haven't done stop by the free trade ideas room, please feel free to do so. It's no cost. You just got to sign up and you're on your way. Lastly, as Scott mentioned earlier, we have a one-on-one session where myself or Jamie or Andy or even others in the past can basically call you up and get you a 1-hour session with us. We talk on the phone and we share our screen and find out a little bit about you, what you're looking for the product, what you're looking for in trading, and we try and get you going in the right direction. And it's usually a very, very informative hour. People are always telling me, wow, that's really a lot to chew on, Steve. I appreciate that. I'm going to have to really take some time here and absorb everything you guys have said us. How do you get into the room? Answer, Don. Just go to the main tradeideas.com and you'll see Trading Room up at the top. All right, so there's the slide that is that we're most proud of because of the amount of hand-holding we do give, and it's a great dovetail into our next slide. You know, when we first started, we were going business to consumer, but then Dan and the executives wound up striking some great deals with Scott Trade and E-Trade, and the focus was really more on business to business, but then we started to really kick back into gear into business to consumer and the retail, and you can see the growth starting to occur. Here is where the AI Holly basically made her debut, and this chart actually after this month should probably be up here on this final line. I mean, we are having absolute parabolic growth, and I'm not surprised. Happy to see it. We had an open house a couple weeks ago with almost 900 people that came in and kicked the tires. And we'll be having another one of those hopefully in a couple of months, but keep an eye on our email for that. So here's a wonderful graph of the pride of our subscribership growth. So I noticed a question early on the AI Holly. Here's just a quick proprietary graph that we have going back to January 1st, 2017. The blue line basically shows the S&P has gained, I don't know, eyeballing it, maybe 13 or 14 points total since the beginning of the year. But with the AI Holly exiting by the end of the day, each day, looks like we peaked around 45, a couple days of pullback here, probably around 42 or 43 versus 14 or 13. So that's how we measure the aggregate end of day pennies gained. It's basically reported in pennies or even dollars on a good day, but with the S&P SPY only up $13 for the most part since January 1st, we've got the AI booking ideas and profits just under $45. So there's a good answer to that. All right. What I'm going to do is I'm going to have you guys hold on to a couple questions. I'm going to go through a couple of things. And then if there's something that you guys are trying to think about how you want to go about getting a scan to show, how do I find a scan that shows me a 5-day high or a reversal or whatever. And we'll try and maybe spend a little bit of time in the future of this presentation to maybe go over some of your requests. But what I want to do quickly is just start with the agenda for today. We'll take a look at the market recap, which we always do. We'll take a look at Holly's recap today, which also was very quiet and telling as so. The trade of the week this week is Square, but I'm going to go back and revisit the last couple just to kind of keep up with where we are on those. And then I'm going to go through, like I said earlier, some of the basics of trade ideas. Some of the stuff I'll show you maybe on my own that's pretty simple. But if you're starting to think about a scan that you might be interested in trying to work on, you know, sit on that question or even pop that question in the box, and when the time comes, maybe we can grab a couple and see if we can figure out how to help you guys with some basic scans. One more tab real quick because I'll forget about it if I don't. The 5-minute volume is something I really, really enjoy monitoring on my single stock window, and Weight Watchers was the trade of the week 3 weeks ago, but I reminded everybody that it was coming into earnings actually today. One of the reasons we had Weight Watchers was the short float was an unbelievable anywhere from 70 to 80%, no matter depending upon where you got your data, but it was a very, very high short float percentage, and that's what originally got it on the radar. The problem is, and we'll take a look at the chart in general, is it waited until the last 2 days going into earnings before the short squeeze of the weak hands popped out. So the trade worked. It just required a little bit of patience. But the reason I fired up this slide was to basically show you guys as the market, as Weight Watchers was heading into the close here, this is the first thing I monitor, volume, 5 minutes. You know, for the last couple of weeks, Weight Watchers was doing 40%, 37, 27, 50% of volume, but today and even yesterday I really noticed by paying attention to my 5-minute volume metric that there was a lot of interest going into the close as the stock was moving higher for sure. So really wanted to just print out that screen and remind you guys, if you're using the single stock window, when you double click on a stock, it's going to change the charts and also will change the data points in here into your single stock window, of which I like to look at short float. I like to look at the size of the float. I like to look at, are they making money, earnings per share? Definitely, what's the earnings date? Well, 0.75 means we're less than 1 day from earnings. That means earnings is today. Tomorrow, this will be a negative 1.0, with the negative meaning earnings are behind us. I like to know what the average daily volume is. I can see that down here. It's 1 million shares a day. We did 5 million shares today, and look at that. Our relative volume ended up the day right around 5 million. So that relative volume was also definitely in play. So again, the takeaway from this slide is watching this price action very closely going into the final hour. These were wonderful metrics to see on the 5-minute volume. All right, let's go into the market recap and see if anything's going on here with what we like to look at, S&P, SPY. Well, we've had these horizontal lines we've been using for weeks on end as the levels of resistance and support. What we had today was an attempt to kind of close on lows, but once again, the last minute buyer jumped into the S&Ps. We always seem to have this 330 buyer that shows up, and until that changes, we still have the same scenario. Forget the green candles. All these green candles closed strong, but look at this candle was down and a nice wick at the end of the day. Buyer showed up. Same with this candle, down, but at the end of the day, wick, buyer showed up. And today, more of the same. We were down near lows, close to the low of around 330. Buyer showed back up. Now, some people think this is a conspiracy theory. I read a great article yesterday that said there's a lot of money that has to be put to work out there passively, and a lot of that money is just being put to work in mutual funds and indexes. And the last half hour of the day is really where the liquidity and the big block auctions and the trades can take place for the bigger players. So more than likely what we're just seeing is a continued pattern of money being put to work at the end of the day. So what I want to say is until we stop seeing that, that seems to be the bias, that last half hour of the day. At one point, we're going to find the last half hour of the day where we do close on lows and have a big red candle probably closing on lows. That would be raising red flags if I was a trader, because everything up until now, the 330 buyer just continues to show up and prop up this market. Now, what could happen here? We could just go into a sideways flagging type action with the spiders, or if we decide to give a little bit back, well, then it may be time to start looking about where a pullback could be. This particular line right here was a prior breakout line, so this 233 level could, in theory, over the next week or two, possibly be a level of a downside target, just to kind of give the market a breather. Let's take a look at what the Qs might have in store. Well, there's a little bit of a gap right here in the last level of breakout, so the Qs could be looking at a 127.46 pullback. That's assuming that this choppy sideways action doesn't just stay sideways and turn into a bull flag. And if it does, that's even more bullish than anybody could imagine. But I think everybody's ready for some sort of a market pullback, some sort of a breather. And so what I like to do is just look and see where the downside levels could be, because those of you that have been around a while know the market can have a funny way of taking the stair step up, one step a day, but all it takes is 1 or 2 days to wipe out about 15 or 20 days. So that's always in the back of my mind, the musical chairs, the elevator down versus the stairs up. So we'll keep an eye on that. The Dow, same principle, not really pulling back, kind of flagging, going sideways, but if it did have a pullback, maybe this level right here at 205-ish roughly. And lastly, the IWM, I was really, really hoping last week on this green candle right here, I thought, hey, you know what? The IWM, which is a proxy for the Russell 2000, our smaller cap type stocks, they were lagging. And I was really hoping that the market was going to reach down and bootstrap them and pull the IWM up much out of the range that the spiders, Qs, and diamonds have been in. But to no avail. There is a real level of supply. We can probably even add another little line right there. These IWMs don't want to stay above this line and close and stay there very long. We dropped back down last week, popped back up again yesterday. Now we're back down into the range. There is no trend line. There is no intent, kind of like we have with the spiders and the Qs and the diamonds all moving in a nice upward fashion. So a little bit of caution flag here on the Russell 2000. I kind of thought we might get some follow through last week, but we didn't. The small caps are really showing a lot of frustration. So keep that in mind as far as the IWM goes, which is our smaller cap stuff. And that's pretty much it that I have for the market cap. Keep an eye on those IWMs, but everything else, we're either flagging with a bull flag or we are just going to pull back down. Ideally, I'd love to see at least a pull down, a pullback, some sort of a breather to come in and reset and build a new higher low rather than just day after day of moving higher and sideways. So I don't know. Anything you want to add to that, Jamie? You would be on mute, but that's cool.
Yeah, sorry. I couldn't find my button all of a sudden. No, yeah. I think you're right on the money, with what may be coming, referring to that bull flag that could potentially be forming that you were referencing earlier. I mean, yeah, where's all the money to go? There's all this money coming out of, paychecks every month for the 401k plans, right?
Yep.
The money
gotta be go. Like Dan Merkin says, the market's rigged. It's rigged to go up because the 401ks, they just got to go somewhere. They either go to active managers or passive managers or index funds. But this QQQ is looking very much like it could be a flag, but we will see. We shall see. Obviously, that would be the strongest scenario to just go sideways for a few more days, then push to new highs rather than pulling back down to maybe this gap fill or some sort of a market breather.
Right, and hey, we've seen this song and dance before. We've seen the movie over and over again, because in a lifetime, you may only get to see maybe 3 cycles. I mean, think about how many cycles we've seen since we've been kind of old enough to even know what the markets were. I remember the first one. I was like a freshman in college. It was in 1987. Boom, right?
Yep. Here's about as far back as I'm going right now, and what Jamie's talking about is we are in blue sky, never before tested land here. We are John Glenn breaking out of the stratosphere. So when we always say look left to see where the prior resistance is, that worked really well back down here in these days. But looking left now has nothing. So it's almost like a vacuum pulling this market higher. I would really like to see a pullback of some sort just to remind us that price action can breathe and can act normally when it needs to. But, yeah, we'll see.
And the last time we saw this, of course, we had the whole 2008 fiasco. But remember, approximately 20 years ago, the same thing, So what's the longevity? Nobody knows.
When the music ends, we'll know when the music ends.
Exactly.
And trust me, guys, it will be the elevator down, not the stairs down.
Because Greenspan catalyzed that whole period way early with his, irrational exuberance comments, and then it just kept on going for a couple of years.
We could go way back and discuss Greenspan and how he let bubbles develop. So let's move on to Holly. As you saw on the earlier screen, not much in the last 2 days. Yesterday and today were very quiet. Not too many trades. I think we only had, about 2, 7, 9 trades. And what's also unusual is completely risk-on type day. If I go to the spiders here, you'll see what happened was we gapped down. Here was our gap down. Coming into today, Holly had been testing a lot of long strategies here, had the best win percentage and profit factor, and only one short actually showed up in the mix. But we had a gap down in the market, never really got back to the positive level, and this is what we call as kind of a statistically noisy day. And the statistically noisy days are days that don't necessarily have a nice broadband rally that lifts all boats in all directions. If we had had one of those days, we might have had a much better risk-on day, but you can see the risk-on column here, basically not many winners. It was basically quick hits, quick in and quick out for Holly, and even then, the most winning most winning trade was 25 cents on the upside and 25 cents on the downside. So kind of a non-event today. If you look at the histogram, that's actually telling us something. I mean, there are days when the market starts off and Holly's just trending higher all day long, maybe in a certain direction, and you've got a market that's conducive, lifting all boats with a broad-based rally. It's not exactly what we had today. We had a gap down, an attempt to go higher, then a midday draft way back down and then back up. So a very statistically noisy day. So it's not really surprising to see that risk on basically was flat for the day, or up 8 cents, whatever you want to call it. So I've talked before about directional bias. I'll also talk about trade selection. Today, the trade selection was very, very much on the light side. I mean, I think for a while this morning there wasn't very many trades at all. Let's take a look. Our first trade of the day, we had a couple at 6 or 9:30 your time, and then basically got real quiet for 3 hours in the middle of the day. When you see Holly get real quiet, that's basically a kind of a key that the statistically perfect AI is not seeing an edge, and Holly is not going to fire any trades off unless the edge is there. So, in addition to the actual individual name sometimes, or in addition to the directional bias we might see, also the amount of trades taken can be a tell as to what the AI is seeing or not seeing. We always use a good analogy as like surfing, okay? So Holly's always out in the ocean surfing, no matter what the waves are doing. But on a day like today, it was probably like lake water, just a couple of small little 1 or 2 foot waves, nothing really going on. So it's almost like our canary in the coal mine sometimes. If we just take a quick look and see, what's the direction the AI has been moving, what's the trade frequency they've been moving. So today, not a whole lot to go over other than the fact that the AI was sitting on the hands for the most part. And again, no real trade arounds for the most part. A very choppy day. Anything you wanted to add to the AI that we have? Any questions or anything that needs addressing?
Well, you know what the AI activity reminded me of today, and I hate to spin back 20 years all the time, but there's some relevant comparisons here. And Steve, you know as well as I do, back when the market structure was actual market makers on the bid and offer side, and we had
when it was mono e mono, yes.
And we had eighth and quarter spreads. If it was a day like today, back then what we had to do is what we call throw up floaters, right? You had the regular market, and you could see all the bids and the offers. It was nice and orderly, and we could hit those bids and offers like you think a market should operate. But we had another system called SelectNet, which was independent of the SO system. So if you saw a stacked row of bids at 20 and a stacked row of offers at 20 and a quarter, you would just throw out a bid and an offer on SelectNet and see if you got any action. And if you did, well, that gave you a little informational edge, right?
Mm-hmm. Mm-hmm.
Some guys
supply was there. Yeah.
Right. So, today that's what Holly reminded me of. She's like just throwing out testers, the specific events of these strategies that you see in the strategy panel. Those filter sets are so complex that things have to be perfect in order for that event to be satisfied, and the events just aren't happening. You went out to hunt a bear, but no bears are showing up. So you wait for the next session. And that's what we can pull out of this information.
Yeah, I'm reading a couple of quick questions. Ted, you got a good point. I try not to get 2 steps ahead and just let the footprints in the sand tell me what's going on, but we do have a presidential speech to Congress tonight. There could be some action tomorrow in certain sectors, maybe if there's some really aggressive talk about biotechs and the price of pharmaceuticals, well, then that's the kind of thing that could hurt pharmaceuticals tomorrow. We just never know. We got to just show up and react. And
look at what happened to the uranium stocks as of late, that
yes.
got lit on fire.
Yes. I also see somebody asking about trade ideas to Fidelity. I'm assuming that they're talking about integrating the software for automated trading. That's something that we have not talked about today, but we do have a beta program going where you can automate any of your custom formulas to Interactive Brokers. Now, does it include Holly in these trades? No, it does not. These are our proprietary trades. These are not open to the public. But any type of strategy that you use that's an alert window that spits out trades, for instance, like this bouncers, spit out usually 10 to 12 trades a day on the bouncers, this could be the perfect kind of a thing that you could automate with Interactive Brokers. But to go a step further, I don't know who the next brokerage platform is going to be. I think we have a few short lists, but we're going to work the bugs out of the auto trading with Interactive Brokers first and then move forward to some more platforms down the line later. But they will be available to trade using any alert window, because our alert windows basically give us a timestamp and a price stamp, and these are also the ones that we can back test. And that's essentially what the AI is based on. I mean, real quickly, if nobody's seen this, I'll go ahead and do this for you. I mean, this is the kind of thing that you could automate. We would start with a back test here, and we would open up the parameters to all day long, and this is essentially a 45-minute hold. It's just looking for stocks that took out yesterday's lows but didn't follow through and are bouncing back up into yesterday's range, and it's usually a decent 30 or 45-minute hold. I can back test a 1% stop loss with a 3% profit target, have those be enabled in the final mix, and we can sample as many days as we want, going back 62 days, trading days that is, or about 3 months of time. So let me simulate buy and see if this thing can actually give us a first run pass. So this, guys, is essentially what the AI Holly is built on. This is the engine that is back testing, and Holly does probably about 1 million practice trades every night using about 35 or 40 strategies and then finding a final score. But what I'm going to show you is here, this is the kind of thing you would do if you were wanting to do some automated trading and get this thing shaped up to where you really want it and know exactly what time of day you want it to fire or maybe how long you want it to hold. So here's our initial run gives us this black line moving higher, which means the account's actually growing on this strategy, but the problem is there's 954 trades. That's just way too many trades. We've got 51% win percentage, which is a coin flip, and a profit factor of 1.47. So this isn't really something I would be comfortable maybe deploying into an auto trading strategy. But what we do is we just start with this as our basic. We go into this tab called optimization, and this is where Holly starts to do her magic. And we can take a look at the price levels and see, well, this is a $10 to $90 strategy. Pretty much every $10 level looks decent. Let's go into time of day and change this interval to 30 minutes and see if we see something. Well, what I happen to notice, and you guys can see very quickly, is after 10:59 my local time, we go from a profit factor of 3.74 to the abyss of a bunch of crap. So obviously this is not a great strategy for the final 2 hours of the day. What about the beginning hour of the day? Well, 1.34, 1.5 profit factor, nothing special, but look what happens right here at 8:30. We jump up to some really nice heat maps. So if we look at this like a steak, that's the good red meat of the steak there. This is a horrible piece of fat that needs to be cut off, as does this. This really isn't doing us a whole lot of good. There's a lot of trades early in the morning that aren't giving us much. So what if we just rerun this sucker again from 8:30 to 11? And this is the kind of thing in what we talk about optimization, basically improving our odds by just a simple change of the day. So let's run that again, and we're cutting out that first couple hours of the day and the second couple hours of the day. Well, now what we get is we're down to only 220 trades over 60 days, much more manageable. Our win percentage is up to 57%, and our profit factor is almost doubled from 1.4 to 2.7 here, basically. So just a quick lesson on how you can use that back tester on any A window, and once you get comfortable with what it is you're looking for, you can start to deploy these things if you're interested in auto trading using Interactive Brokers. But right now we're still in beta test. I think we're going to be in beta for maybe 6 or 7 weeks on that, and there'll be some bugs as we work out throughout that period of time. So that being said, let's go to the trade of the weeks. I've got a couple I want to talk about. Let's go way back to Weight Watchers, because that was the one from 3 weeks ago that I was noticing it was spiking up and kind of just following along this trend line. But I had mentioned that we had a giant 80% short the float, and earnings were coming up. So the idea was to try and catch some short squeeze players who didn't want to stick around and hold a short position into earnings. And what do you know? I mean, it was about a 3-week time of patience back and forth. There wasn't really any much except for these couple days right here, but bounced off support that we knew we had at 12. Yesterday started to show its true colors. The volume really kicked in yesterday and kicked in even more today. That's why I was showing you the 5.0 relative volume. I think it was at 9 this morning on the open, but the volume told the story. But it did exactly what I thought it would do. It just waited, which is human nature, I suppose, to wait and procrastinate and wait until the last few days. But what you see right here is these people 80% short the float that didn't really want to stick around for earnings. Well, let's just see what happened to them. Let's go to properties, post-market, and it looks like there's a wild after hours. I know they beat by 2 cents, so they shot all the way up here and then pulled back, but they're back up after hours. It looks like, you know, they might have some more follow-through tomorrow, and could be one to keep on your radar because we now have earnings behind us, the numbers are out, and the shorts appear to be wrong on this one. If they were right, we'd probably be down pretty good after hours. So let me turn my post-market back off. So that's Weight Watchers. Weight Watchers did exactly what we thought it would do. Using the short squeeze, it just waited until the very last minute, last couple orders. All right. The one that came after that was JSO last week. JSO was right here. Our first day was a really nice 6 or 7% move. and then some give back, and then another nice move on the third day, and then now some give back again. Essentially what we've done with JSO is we've basically broken out, got some alpha, and we are coming back and retesting. Hopefully this is going to do what I always say these things like to do, is take prior resistance and turn it into future support. So ideally we'd like to see this level hold in JSO for the most part. And what was this week's trade of the week? Oh, SQ, thank you. All right, SQ, another short squeeze attempt. Basically, I'm going to talk a little bit more on the next alert that we look at. I found this on my Squeeze Me alert, and I was looking for stocks, or we were looking for stocks for a short list to curate and agree on, of another possible short squeeze, but this time, rather than trying to go for a trend change that's breaking its trend and basing and moving higher and got a lot of resistance to work through, let's try something that doesn't have any resistance to work through. Looking left, what we see is a new issue that basically opened up back here on this day. These were our prior highs, and Square is just slowly moving up. We had earnings. This was our earnings gap, and we have 37% short the float on a stock that is at all-time highs. It was basically at all-time highs yesterday up here at this level, pulled back a little bit today, so it's kind of back to where the initial breakout was. I want to show you on the 15-minute chart also what I was kind of seeing. Just this part right here, back to here, kind of a horseshoe. Here's our 15-minute gap up. The horseshoe is the trade setup that I like to use, where a stock gaps up, it cannot fill its gap, starts to move back higher in the direction of the gap, slowly, eventually gets back to making a new high above that gap. And that is usually kind of a U-shaped pattern on the intraday, and that's exactly what happened. So we got a nice pop yesterday on the SQ, and then a little bit of give back today, but we're right back here in the range. I'd like to see this level certainly hold for sure. And SQ does not have earnings. That -3 right there shows us that we have earnings behind us, so nothing really to sweat about. But I'll tell you guys, earnings can be a tough one. You lose your edge, you lose your control when you gamble and take stocks into earnings. But on a stock like Weight Watchers, I mean, here's a thought. A nice move yesterday, awesome, huge move today, definitely some profits. There's nothing that would prevent me in the past or anybody in the future from doing something like maybe taking some profits that you had and then rolling the dice and letting those go into earnings. But just going into earnings on a stock that you're not up on or that you're down on, it's a real roll of the dice and can be a tough deal. All right. I'm going to show you guys something I usually don't show. It's my own proprietary sheet, but I'm going to bring it over. These are the trade of the weeks going back. And the column that I really want to highlight most, we have the same column in Holly. It's called maximum profit. In other words, how far away from the entry point, how much profit was actually given at one particular point? What was the zenith of the profit? And going back to the trades of the week, all right here, this particular column is showing that there was alpha delivered. Sure, a couple of them reversed and stopped out, but this one stopped out, FCX, down 8%, but at one time it was up 11%. GoPro did stop out at 8%, but at one time it was up 12%. So I'm kind of proud of this particular column. It's showing that there is alpha being generated, but the more time you go out on the horizon, the harder it is to really, keep track of events and things that can happen. But, for the most part, that's a pretty good deal. We're generating some decent alpha, at least in the early part of these trades of the week. A couple of them have stopped out, but for the most part, they are performing pretty well. What I want to do now is I want to bring up an alert that I've used I called Squeeze Me. Squeeze Me is actually where we found the Square trade because what I want to do is I want to kind of show people that get caught up in configuring stuff for today. Okay, today's high versus yesterday. What's today's volume? What was the gap today and versus yesterday? And there's other ways to really look at the bigger picture using trade ideas filters and scans. And I want to try and help give a real nice way to look at the bigger picture. So here's Squeeze Me, and this is nothing more than just a giant list of stocks that have a giant short float. To be exact, 25% is our minimum short float. There's not much else going on here. The price is between 5 and 200, and the average daily volume is 300,000. Well, what if I wanted to find stocks that are on a bigger picture? My good friend Brian Shannon has a great rule, and he says he doesn't like to think about short squeeze trades unless they're above their 50-day moving average. Well, we can do that. Let's pull the helicopter out, guys, and start using the bigger picture. If I type in 50 MOV, basically, that's all the abbreviation I need to bring up the filter called change from the 50-day moving average. I always use percent over dollars or bars. Percent's going to be the best thing to use. So let's grab that and add that filter. Okay, here's our filter now. So what if we say the minimum amount it has to be above a 50-day moving average is 0.01. And by checking our work right here, the server says the price is at least 0.01 above the 50-day moving average. So that would satisfy somebody like Brian Shannon's rule of thumb in trying to look and stock and maybe chase a short squeeze event. So if we click OK, now all of a sudden we've shrunken it down a little bit, but we still have a lot of stocks that are above their 50-day moving average. So we could probably do one better. Let's see. What if we do position in 1 year range? Let's see if we can find the ones who are getting real close to a 52-week high. Here it is, position in year range. All right, well, let's say 95%. I mean, we're getting 5% away from a possible new 52-week high. What happens? Again, here's a nice bigger picture filter, because 0 equals the 52-week low and 100 equals the 52-week high. So what happens if we just squeeze all the way up to the minimum column of 95 percentile? What are we left with? Okay, now we're left with a few other ones that are pretty small. Well, this one's on my radar right now as we speak. You can see the red line, that dotted line right there, is a pivot point. What's going on with TSRO? Well, it's pretty close to its 52-week high right here, and it's also got 47% of only 23 million shares short. You guys might want to write this one down, TSRO above 192.75 or 192, what is that, 192.94. This could get interesting because if you put yourself in the shoes of a short seller. Do you want to see this thing go to highs when you know 47% of your peers are also starting to freak out? Probably not. So this is how you can really start to drill down. Oh, look at this one, another one that actually just triggered today. TDOC is also at 52-week highs with 38% short the float. Well, that's pretty cool. Let's take it one step even farther because we've got the ability to do position in all-time highs. Let's see if we can find something getting ready to go to all-time highs. Let's turn off our 1 year range and go back to position in lifetime range. Here it is right now. So let's crank this at 95. See if we find anything interesting. All right, we've got 4 stocks. TSRO was still on there. So not only is TSRO the one I just mentioned, a 52-week high, now we know it's an all-time high. Even more interesting at 47%. Definitely write this one down, guys, because if this thing trades above 192.94, it could get really interesting with these short sellers. So once again, just trying to give an idea of how to zero in on the bigger picture. Stocks like this you want to avoid. What does this mean? This means the stock was bought out, you get the nice premium gap, and then it just goes sideways. You're going to see stocks like this, and they're going to stay like that basically until you wind up, until the stocks wind up merging into the same ticker. So disregard when you see a stock like that. All right. I've got something else I can show, but is there any questions I'm missing that I need to hit? Looks like
I believe we're all good here, Steve.
All right. So I had a guy this morning ask me, he says, okay, Steve, I know exactly what I want. What I want, and I want to see a stock that either just cleared a 20-day high but is reversing. And I said, okay, well, there's probably 2 different ways to do that. Let's see if let's see if we can find 2 different ways. Well, there's one way to do it. We can use a top list, which essentially gives us like a spreadsheet type environment where I can sort by what I want to sort by, relative volume, or I can sort by the short float, which I normally would do. But what was he asking for? He was asking for something making a 20-day high and then reversing. So I'm going to bring these two up here that we worked on this morning and just kind of try to open your mind a little bit on two different ways to maybe skin a cat. The first one I said, well, we can do as a top list, or we can do it as an alert. But for the alert, we're going to need an event. So let's start with the alert. In this case, he basically said, I need this, if, and then that. Well, he wanted to see stocks that were moving high and breaking out of a 20-day high, but his trigger was he wanted to start to see a pullback because he wanted to fade that and go short. Okay. Yeah, John, I'll send the Squeeze Me link. Don't worry about that. Matter of fact, I'll just do it right now while I'm thinking about it. I've got it configured the way I had it last configured, so that's the way it's going to come through. You can change it up however you guys want, but for right now it's configured for all-time highs. I will drop this into the chat window, and that is done. Okay, so anybody interested can copy that link. So back to my guy this morning, he said, I want to be alerted, after it's made a 20-day high but starting to pull back. And so I said, okay, well, we've got to use our event as a pullback. So configure, rather than making a new high or a new low, we just went to what we call running down, which basically means the bids are fleeing, the bids are getting hit, the price is moving down quickly. All right, that's going to be the trigger that sets the alert. But more than that, we needed a bit more of information. We needed change from the close, 0.01. We needed this thing to be positive on the day, so that guarantees everything is up from yesterday's close, kind of like that 50-day moving average example I gave you. Relative volume is doing 30% more than normal volume for the time of day. Here's his 10-day average that he wanted. But here's where it gets interesting. Position in 20-day range. Remember, 0 equals the 20-day low and 100 equals the 20-day high. So what I did is we gave a 100 value, which is it's a new 20-day high. That's our minimum value. So anything coming through this alert has to have just made a new 20-day high, but running back down. And so that running down gave him the signal to pull up the scans that were coming through on stocks that might have been running up, having a nice move, and then running back down. I'm trying to see if I can find some of these throughout the day. I guess it's not showing me my, why it's not showing me my, probably because the day's over. That's why we're not in real time anymore. So he liked that. But then I gave him another thought. I said, the other way we can do this is not so much wait for the running down alert, but let's conjure up a group of stocks that's very close to its 20-day moving average, and this would be done with a top list. So you'll see there is no event in here, no new high, no new low. It's nothing more than a subset of filters. And these will update every 30 seconds, but we can sort based on what we want to see. So let's see how we filtered this one for him. Same thing, change from the close, up 0.01%, relative volume, just 1, doing basic volume, nothing special. We did a little bit more on the 20-day position. We opened it up a little bit. We said these stocks on this list here can be anywhere from 5% below a 20-day high to 10% above a 20-day high, so from 95 to 110 percentile. That's the range that we want to see stocks hovering around a 20-day high. Okay, 5-minute change. This is kind of how we use to see what might be in motion. So if we click on the -2 maximum value, what does that really mean? Well, if you don't know what that means, click on the help button, and what it means was the price was down at least 0.2% in the last 5 minutes. So here's where we kind of satisfy the running down portion, but we're using it as a filter. And there's really nothing else on there, so what I did was I said, let's just sort. We could grab this over here if we wanted to, move that, change in the 20-minute, 5-minute, change in the 5-minute. But we also know that these stocks were all up on the day, and we're starting to pull back in the last 5 minutes. So it gave him an idea when these alerts were coming out that the stocks were up on a 20-day high. Here's a perfect example right there. There's my 20-day high, but the 5-minute started to pull back, and that gave him what he wanted. So what I really wanted to do there was maybe kind of open your eyes on the difference between a top list, which refreshes every 30 seconds, and how we could sort based what we want to see versus an actual alert that gives us the event and the trigger. So, hopefully that made sense. Again, I wanted to really broaden the horizon of not just focusing on today versus yesterday's close or today's gap, using bigger pictures, position in 20-day range, position in 50-day range, position in lifetime range. Do you want something to be above the 200-day moving average? Is that just a basic litmus test for you? Great. Go to search, type in 200, and there it is. Change from the SMA, the 200-day moving average. All you got to do is put in 0.01, and you're guaranteed everything on here is at least going to be above its 200-day moving average. So that's the point of trying to broaden our horizons a little bit and show you some of the filters and the way to think about trade ideas in using bigger picture type stuff. All right, I believe that is it for my agenda. Anything you want to add, Jamie, before I turn it over to Scott?
No, I was mesmerized myself.
You're mesmerized. Awesome. Well, I'm seeing good feedback. Thank you, Jamie, for addressing a lot of the questions in there. Looks like they got what they're looking for. Anybody watching on replay, if there's something you saw that you didn't get, feel free to email me, steve@trade-ideas.com. I'll be happy to drop in any of the cloud links into your account or just email them back to you directly. We want to share. We want to make sure everybody's got, things that they like. And hopefully this made some sense to you all today. Let's check in on Weight Watchers. I'm just curious what it's doing after hours. Go to market after hours, and it's hanging in there. So I think Weight Watchers is going to be spooking the shorts a little bit tomorrow. I have to keep an eye on that one. And also the one that I mentioned, what was it? I even forgot the name myself, but it doesn't matter because I've got it marked up. TSRO. You guys keep an eye on this sucker. 47% short, the float of only 23 million. Man, I wouldn't want to be short if this thing went to all-time highs. Wouldn't want to be short at all. All right. Yeah, that's all the time we do have for today. We'll go ahead and we'll do some charts either Thursday or next time, and we can take a look at a few charts. Not to mention, if somebody's really got a chart they want to look at, you can go ahead and send it to me, steve@trade-ideas.com. I'd be happy to at least give you my assessment of it. I don't mind doing that. So for anybody listening also on the replay, feel free, steve@trade-ideas.com. So we're going to go ahead and call it, and I'll bring up a slide here and let Scott talk about a couple ideas, including giving a promo code for people who don't have the program yet. The promo code will save you 15%, and if you come in and take a one-on-one session for 1 hour, I guarantee you're going to have a really good idea of how this program can be working for you.
Yeah, thanks.
Scott?
Thank you. Before we get moving into other things, we did announce that there's a new beta version out that enables that Brokerage Plus for interactive brokerage users to be able to auto trade and also manage their interactive brokerage accounts from within the Brokerage Plus module in Trade Ideas. I think an email just went out while we were in the webinar to those of you that are subscribers, both premium and standard members. But if you'd like to try that build out, the beta version is up at trade-ideas.com/beta. That'll forward to the download page. I also dropped that link in the chat. Also, we have a podcast.
Was there a slide I should have been on for that, or no?
Also, this podcast now, we've been had the podcast out for a little over a month and a half now, and it comes out every Friday. So just go ahead and search for Trade Ideas Podcast in your favorite podcast application and add us, and then you will have a fresh new podcast in your inbox a little while after the close on Fridays, and you can listen to it over the weekend. Most of the podcasts have been Dan Merkin and Jamie Hodge, along with some other guests at different times. We've also had Brad Williams, David Afariat, Steve Gomez, and some others on. It's always a good, interesting conversation between 10 to 25 or 30 minutes in length. So we hope you join us with that. Just add the subscription to your favorite podcast app. And again, just search for Trade Ideas Podcast. Should come right up. If you don't find it, email us at info@trade-ideas.com and let us know where you'd like to see it. And then we did promise you a promotional code. So if you go to your handouts panel, click on the plus and expand it, there'll be some slides you can download there as a PDF that also include this page, which has the code Holly all week, all caps. It is case sensitive. And that just takes a 15% order total right off the top. Saves you 15% off of your subscription, either standard or premium, off the first month or the first year, depending on what you choose. And a reminder that even if you're subscribing to standard, you still get a full hour of one-on-one training to take advantage of. So, within a first week or so of joining Trade Ideas, go to the support page, click on training, and book your first training session, and that one's free. And it's a full hour. It's a great way to figure out how to get started and get the most out of Trade Ideas. It's part of our onboarding. And also check out the trading room every day. You can also go to trade-ideas.com/trading room and sign up for a free membership there. And you don't even have to be a subscriber to benefit from that. We provide a lot of content even for non-subscribers. So if you have any questions, though, just shoot us an email, info@trade-ideas.com. We'll send out the email to you guys in a couple hours with a link to the video replay, but any questions, just email us, or you can contact Steve or Jamie directly. But the info@trade-ideas.com email address is the best place to send questions. Steve Gomez is @TodayTrader on Twitter, so give him a follow there. Also, Dan Merkin's Trade Ideas 1, Jamie Hodges QuantBot. Those are some Twitter handles for you guys to follow. Facebook.com/TradeIdeasPro is a good page to like and follow if you're on the Facebook. That way you can share the content and some original content we post there with your friends and bring some more people into the Trade Ideas family. Use the phone number if you have a billing issue during West Coast trading hours. But otherwise, for trading questions, email us at info@. Thanks, everyone. Thank you, Jamie and Steve. And we'll see some of you in the webinar tomorrow, I guess. Have a
Turn out.
Yep.
Thank you, guys.
Thanks, y'all. Bye.